Morning, everyone. I'm not going to teach you about mountaineering or cycling, so relax. My name is Binod Shankar. Thank you so much to MECA Academy and Salim and everyone, and Thomas for contacting me. Today, I'm going to talk about something very interesting, the future of work. Ambitious topic. Let's see, a lot of pressure from the morning from Salim saying, you have to exceed expectations. So let's see whether I can do that or not in this short 30-minute time given to me. So this is a picture that you might recognize. On the left is Garry Kasparov, chess champion, grandmaster, very high IQ. On the right is a computer called Deep Blue from IBM, Watson Labs. This is a match that took place in 1996. We're talking about 23 years ago. I think most of you know what happened in that match, right? What happened was, now Deep Blue, 200 million chess positions a second processing capability, and it only had 1/30th of our estimate of human intelligence. And oh yes, it still beat Garry Kasparov, right? So that was a shocker. A lot of people didn't expect that to happen. Fast forward 20 years from then. Everyone watches Netflix. You should watch this documentary called AlphaGo. Okay? Now, on the left is a computer called AlphaGo from Google DeepMind. On the right is the world's greatest AlphaGo player, Lee Sedol, 18 times world champion. Now, what happened in 2016 was remarkable. Now, I want you to just pay close attention here, right? This computer won 4-1 in over 7 days against Lee Sedol, played several moves which has never been played in the history of that game, ever. This is a centuries-old game, by the way, originating from China. And Go is profoundly complex, right? 10 to the power of 170 possible board configurations. That's enormous. I mean, chess is nowhere even close, okay? And Go is also able to now play or dominate ultimate strategy games. Go is one of the best ultimate strategy games. What are we talking about now? AI can now challenge the best human strategists in investments, political, and military strategy, right? Now, in 2017, it went one step higher. They had something called AlphaGo Zero. AlphaGo Zero beat AlphaGo. Okay, computer against computer, 100 games to 0. Okay? And the fascinating thing is, AlphaGo strategies were self-taught. The computer taught itself. The computer taught itself. It was trained without any data from humans. Basically, it went back, looked at many games, figured out how the game works, figured out the best strategies. So what I'm trying to say is machines are learning, okay? Machines are learning. Machines do not require as much human intervention or supervision as it used to, or as they used to before. That's a big development. Okay? I want to introduce you to this gentleman called Hans Moravec, yeah? Austrian, 1948 born, very famous guy, teaches at Carnegie Mellon University, a famous university in the US, as you all know, right? Yeah. He's also an expert in robotics, artificial intelligence, and on the impact of technology. There's quite a few interesting books, if you've read them, okay? Now, he said something very interesting, and I'm going to draw your attention to that. There's actually two things he said very interesting. One was what I'm going to show you now, and the second one, quite contrasting, is what I'm going to show you later, right? The first thing he talked about was something called the landscape of human competence. What does this mean? Now, you can see the landscape of human competence, right? There's obviously a mountain there, that's why I put it there, right? Not really. You have what you call the sea, the low levels, then you have the foothills, and then you have the mountains, right? What do you think is happening here in this graphic? What do you think this graphic is showing? Basically, this sea area, this blue area is where machines have already dominated. They are as good, if not better, than human beings in those areas. We're talking about chess, Jeopardy, arithmetic, vision, speech recognition, Go, obviously, driving, self-driving, it's a matter of time, really. Translation, easy. Even investment. Now, as you go from here, investments, it becomes more difficult for machines to catch up. They haven't reached there yet. And machines are nowhere near here, right? They're not nowhere in terms of management, social interaction, art, book writing, AI design, programming. Where do you think we are? Where do you think human beings are? We're everywhere, right? We're everywhere. We are the foothills, we are the lowlands, we call this lowlands, we call this foothills, and we are the high mountain peaks. We have been scrambling to escape from the lowlands. We got to the foothills. Now we find the machines are already at the foothills. Now where are we? We're scrambling to reach the top. And as you know, and I can tell you from experience, reaching the top of a mountain is extremely difficult and painful and risky. Okay? And we think that the machines will never reach there because, hey, we are at the mountain top. They can never be good in book writing or science or art. It's a question of time. It's a question of time. Okay? So the rise of the machines. The machines are good or excellent at arithmetic, chess, stock picking, captioning images, driving, speech synthesis, so on and so forth. Translation, even cancer. In cancer diagnosis, machines are better than doctors. They have an 85% strike rate. Doctors have only about 40% strike rate. Humans, highly qualified doctors. Okay? That's the situation now. So, is the game over? Are we all done? Should we go and relax and chill out and basically retire now? Karthik Hosanagar wrote a book recently, and he quoted a very famous artificial intelligence specialist called James Barrett. And James Barrett was asked, which other game is left for machines to dominate? And his answer was, I don't think there are any games left. The next game is reality. So are we done? You know, are we over? Is the game over for the human race? Especially if you consider the fact that all of us, or most of us, are highly specialized. And you probably noticed that over the last few decades. Do you know this guy? Yuval Noah Harari. He's a very famous author. Lots of bestsellers. You should try and read his books. Sapiens, Homo Deus, etc., etc. He said, it's becoming easier and easier to replace humans. Why? Because we have become highly specialized in what we do. We have become very narrow. Earlier, in the 10,000, 20,000 years ago, we were hunter-gatherers. What we do as hunter-gatherers, we hunted, we gathered, we cooked, we did everything, right? But now, most of us cannot make a cup of tea. At least I can't, right? We are so specialized that we are credit risk management within the fixed income portfolio in the MENA region, right? Or we are specialists in IFRS 9 implementation. And beyond IFRS 9, we know nothing of the world. But ask us about IFRS 9, and I'll bore you to death. Okay? So for AI to squeeze out of the job market, it needs only to outperform us in specific abilities that a particular profession demands. So what happens? It's easier for humans to be redundant, okay, because we are so specialized. And Economist magazine, the famous Economist magazine in the UK, recently had this cover called Masters of the Universe. I think it was in September or October. And they said some very interesting things about investing in machines. They said, computers following rules set by humans manage $4.3 trillion of American equities, exceeding the sum actively run by humans for the first time. As in humans managing money, less than computers managing money. Okay? New AI programs are also writing their own investing rules, and only part of which humans understand. And humans are about to understand why they are no longer the smartest investors in the room. Basically, a computer can make money than you can, more money than you can. Okay? So where does that leave us? Is this the evolution, you know? Monkeys, human beings, executives, CFOs, FDs, and then the robot replacing all of us. That's probably maybe too catastrophic, right? Maybe that's not the way it should be. Because, and this is a relief for you, right? I've got some good news. There must be some good news, right? And the good news is in the form of what the other guy I mentioned, that Hans Moravec, okay? What you call Moravec's paradox. He said, very interestingly, high-level reasoning requires very little computation, but low-level sensory motor skills require enormous computational resources, interestingly. Yeah? So the oldest human skills are largely unconscious, right? So appear to be effortless. Like what? I mean, recognizing faces, right? Perception, social skills, right? Recognizing your voice, motor skills. All these are old skills. But these old skills are developed over thousands of years. The new skills, when you talk about new skills, mathematics, engineering, human games, logic, scientific reasoning were developed relatively recently as far as humans are concerned, right? So his point was that computers will find it far more difficult to replace the old skills and more easy to replace the new skills, because new skills are about logic and reasoning, which can easily be programmed. Whereas the old skills, you'll be surprised how much computer power is required to do, for example, something like recognizing a voice or saying hi in the right context. Okay? That's the good news. Okay? The other good news, or bad news for AI, or bad news for the machines, is that what computers are doing now is what we call ANI, artificial narrow intelligence. Okay? They are nowhere near achieving what we call AGI, artificial general intelligence, which is what replicates human intelligence. We can do many things, right? We can do many things. Computers can do one thing very well. Okay? So that's one issue that they have, right? They're very narrow, we are very broad, and it doesn't have general purpose intelligence. Computers are far, far away from that. How far away? There's a guess. 10 years or 50 years. But I'm not going here to sort of guess what the number, but it's quite far away, right? And AI has many limitations. I like to beat AI, right? It's quite a nice pastime of mine, right? As long as it allows me to beat it, right? Let's see how long. AI has many issues. One, it needs a vast amount of data. We know this, right? Without data, AI cannot learn. Machines cannot learn, right? They are not able to be ethical. They cannot empathize. They cannot communicate or build trust. That's for humans to do. Right? They lack curiosity. They lack creativity as well. They cannot collaborate effectively, at least as of now. Okay? They cannot handle unpredictable situations. AI can only handle situations it has been programmed for, based on data it has discovered or learned from. Nothing more, nothing less. It cannot tell a story. It cannot stand in front of a stage like I can and tell a story. Hopefully, I don't get replaced by a machine in the future. Okay? And it cannot lead, cannot articulate a vision or instill confidence. Leadership skills, I can't imagine machines leading anyone today. Maybe after 50 years or some time later, but not now. So I'm not proposing that AI will replace us. I'm not proposing that all of us are going to get redundant and replaced by machines. I'm proposing that, and this is my thesis, that we're looking at a collaboration between AI and what I call HI, human intelligence. I think for the next 5 to 10 years, that's my forecast period, anything beyond that is foolish. We are going to see increasing collaboration between machines and humans. And one classic example of that is in finance. Now, my domain expertise is in investments. I'm a CFA charter holder. I'm also a chartered accountant. But I look a lot into investments. I teach investments and finance and portfolio management and asset management. So I'm going to talk to you from that point of view as to what's happening in finance in that domain. Yeah. Now, data and finance have always been closely linked. Finance has always been about data. We know this. Yeah. But what we don't realize is the volume and complexity of data is exploding. So what do you mean by that? The normal data that a financial analyst would look at or an investment manager looks at is what? Annual reports, yes? Annual reports, websites, conference call transcripts. But now what we're talking about big data talks about more. It talks about social media, it talks about blogs, it talks about vlogs. We are even talking about data comprising of satellite images. We're talking about weather data. We talk about lots more stuff that we could not think about, images. The aggregation of all that is called big data. Right? By 2025, amount of data will double every 12 hours, and old data will become useless. AI works very well because it's very good at finding hidden patterns that we can't find. Right? Have you heard of a guy called Jim Simons? Jim Simons is the fund manager for a fund called the Medallion Fund. He's based in the US. He's been managing money for about 35 to 40 years. He's a billionaire, as you would expect with a hedge fund manager. And he manages his funds based on AI. He doesn't employ any finance people. All his team members are computer scientists and astrophysicists and programmers. And his main job is set up AI programs that find patterns which cannot be detected by ordinary human beings. And he makes billions by finding out patterns. He gets into a market and leaves in a few minutes or seconds. You don't even realize it. Okay. AI is very good at rapid and accurate processing of high volume information. And very importantly, AI understands unstructured data better than a human being. What is unstructured data? Social media is unstructured data. Weather patterns, unstructured data. Photographs of landscape, unstructured data. Okay? Human beings need structured data to understand things. Now, what's happening now in finance? Let's talk about finance, right? What's happening in finance now is we have fintech. Everyone heard about fintech, right? Financial technology, fintech. The earliest innovation that you can think about in fintech, which are mobile payments, right? You've heard of robo-advice? Robo-advice is where you don't go to a financial advisor, you log on, you tell the computer your background, your investments, your experience, and the computer tells you where you should invest to get the returns you want for the risk you're able to take. Robo-advice becoming very popular. And peer-to-peer lending is also, but they're all complementary, they're not disruptive. AI has not disrupted finance to the extent that you would think it has. It has not. They're very complementary. In other words, you need a human being alongside the AI. So analysts can do deeper analysis and portfolio managers can take better decisions, but it's all complementary. It complements human intelligence. It does not replace human intelligence. Yeah? And the latest is what we call NLP. Yeah? It's natural language processing, which does all these things. It interprets management sentiment during earnings calls, the quarterly earnings calls. There is a software that can pick up the sentiment of management embedded in those calls better than an analyst. Is it positive? Is it negative? So for example, interestingly, I was at a conference recently, and they were talking about a software which, if the CEO talks too much during an earnings call, it's a bad news for the stock. Sell the stock, right? If the conversation between the CEO and the analyst on the call is genial and friendly, it's positive for the stock. Okay? If any analysts have been excluded from the conference call, it's negative for the stock. You know what I'm saying? All this picked up by the system, and basically you buy and sell accordingly. Yeah, interesting. Yeah. Another use for NLP is you go through sell-side reports, stock reports, to judge gauges in changes in analyst positions. Are they being negative? Are they being positive? Are they being neutral? And of course, you go through a lot of unstructured data to find identified trends and investment ideas. And I'm going to show you one very interesting case of this, which is called quantitative behavioral economics. Now, most of you have heard about behavioral finance, right? Yes? Behavioral finance is where you apply psychology in the world of investing, right? To basically identify the biases and guide clients and tell them this is a bias, it will destroy your portfolio, so change your behavior. That's what I teach behavioral finance in CFA, for example. Yeah. Now, quantitative behavioral economics is a fantastic and very new merger of statistics with behavioral finance, which is very interesting, right? You have hard science called statistics, and you're merging it with something called your psychology, statistics and psychology. And I'm going to show you a use case, which is what we call sentiment analysis. Sentiment analysis is basically, what is sentiment? Sentiment is media sentiment. What is the media talking about? What is the social media talking about? What is the internet talking about a particular company or a particular stock? That's media sentiment, right? And sentiment is a positive versus negative references, right? What the media says, by the way, is more likely and more timely than official data has been found through research. So if you hear some chatter on the media, right, the likely official confirmation comes much later. In fact, too late for you to take any action as an investor. Right? And one example is PMI. This PMI is the Purchasers Managers Index. It comes out every quarterly in the US and Europe. It's an indication of manufacturing activity. And if the PMI has gone down, it means manufacturing is weaker, recession, like Germany now, for example. If PMI is higher, manufacturing is stronger, good for the economy, blah, blah, blah. China is another classic case, right? Now, research has again shown, all this is based on research, by the way, stocks with positive media sentiment outperforms negative sentiment stocks over the next 90 days. It's been proven. This is actionable research, okay? However, a small caveat here, when investors are too positive, stocks decline. Now, what is too positive? When it's too positive with respect to the fundamentals. So you don't ignore the fundamentals, you still look at the fundamentals. But if the earnings has gone up by 1% and your investors are 25% more optimistic, it's time to short the stock, not buy the stock, right? So there's a bit of nuance there. Makes sense, right? Makes sense. In the US, they ran this research in the US, the S&P 500, yeah, and the NYSE. Stocks with positive sentiment outperformed every year in the last 20 years except one. I don't know why, for the except one, before you ask me. Okay, they tried running this in the UAE, they tried running this in Saudi Arabia, it works. Doesn't matter which market, it works. Globally, it works. Emerging markets, frontier markets, developed markets works. Yeah. And the first bad news, by the way, is never the last bad news. You understand? Do you grasp that fact, right? What investors do, by the way, is you hear bad news about a stock that you're holding, right? How many of you are stock investors? Can you please raise your hands? Have currently invested in stocks? Don't be shy. Okay. How many of you sold your stock immediately after hearing the first bad news about a stock in your portfolio? One out of many. How many of you are still holding on to the stock in the hope that bad news will become good news as well? Okay. This is what we do. Okay. Unfortunately, bad news doesn't become good news. Bad news sometimes gets steadily worse. Steadily worse, yes? Recession, bankruptcy, etc., right? So people rarely sell after the first bad news when you should be selling after the first bad news, right? Sentiment analysis actually picks up the bad news before other people start selling. So automatically the system will tell you, by the way, there's lots of what you call chatter on the internet about negative news, right? Hence you can time your action. Timing becomes very important, right? Timing is everything in the markets, as you know, right? Not just buying and selling the right stock, it's also timing at the right time. Yeah. And this company that I'm talking about has sentiment indices that tracks the sentiment from 2,000 news sources from 187 countries, 36 commodities, 62 stock indices, and 45 currencies by the minute. In other words, you can have a dashboard in front of you, or 10 dashboards, depends on how big or space you have on your desk, right? And track different markets and look at where it's positive, where it's negative, and then make your moves accordingly. Okay, interesting. Yeah. And I'm going to show you a few examples of this sentiment analysis. This is sentiment analysis for Bitcoin. Okay, anyone invested in Bitcoin? Good. We're all very, very smart, very prudent people, right? We don't go investing in Bitcoin and cryptocurrency and things like that. Yeah, we invest in loss-making stocks, and things like that, right? So this is Bitcoin's price versus social media buzz, 10-day and 90-day averages. As you can see, increasingly social media buzz as the Bitcoin bubble grows, you see. As the bubble is growing, the social media buzz also grows. Sometimes it leads the Bitcoin bubble or the asset bubble. You can actually see that the momentum where it's heading. Okay, classic example of this, right? So if you remember, this is between Jan 2017 and Feb 2018, I distinctly remember the last quarter of 2017, Bitcoin prices went up a lot. Some of my friends were sitting on millions and they thought, that's it, I'm going to retire. Unfortunately, after a few days, they became paupers because it came down and then I didn't hear from him again, I wonder what happened. Exactly what happened, right? Another example of sentiment analysis is in ranking of sentiment-based opportunities in global stock markets. So those countries that you see in red are what you call not worth investing in. You should sell. Those countries in, not red, orange, maybe I'm colorblind, orange. Those countries in green are where the sentiment is positive and worth investing in, okay? And there's a list of all these countries and the sentiment, the strength. So the higher the number, the better. So Brazil and Turkey were apparently good at that point. Don't go and invest based on this chart, please. This is a bit obsolete. It's a bit obsolete. Okay. Timing is everything, like I said. Timing is everything, yeah. And Australia and Canada apparently are a no-go. Based on sentiment alone, nothing else. Based on positive and negative media information, okay? Interesting. But then, this is where AI makes huge mistakes, right? So Anne Hathaway is a famous Hollywood actress. Berkshire Hathaway is a famous company. So when the AI was told to pick up positive or negative sentiment of Berkshire Hathaway and invest accordingly, obviously it tracked Hathaway. And guess what? Anne Hathaway came up. And guess what? Almost always the reference to Anne Hathaway is positive, right? So whenever Anne Hathaway is mentioned in the news, the computer listens carefully. Is it positive? Yes, buy Berkshire Hathaway. So, yeah, so so this is where computers cannot see context. Computers don't understand context yet. They are far away from that, right? You and I would know the difference between the two. Computers yet cannot. But we'll probably get there soon, at some point, yeah? So what's the forecast? Now, I should be very careful about forecast, right? And people get shot for giving the wrong forecast or, look foolish after some time if you give the wrong forecast. So this forecast is only for the next 5 to 10 years. I'm not going to stand here and say this is a forecast for millennium or a lifetime. That would be, incredibly foolish. In finance, specifically investment management, okay? We are talking about asset management, portfolio management. The forecast is not very difficult to make. AI will replace humans for most work requiring high speed. This is straightforward. Yeah? It's going to happen. It's happening already around us. Trading in finance, buying and selling stocks in finance, humans do not need to get involved. Systems are much more faster, much more reliable in executing buying and selling than human beings. It's already happening, by the way. Yeah? Trading in stocks and bonds and currencies and things like that. Any repetitive manual task, like, for example, you have people, even now in your companies, I'm sure, who look at SAP or any Oracle or some Bloomberg or something and then download the data and export it to Excel, right? And then from Excel, they sort of sort the information in Excel, and then they go to PowerPoint and make something in PowerPoint. That's all going to disappear soon, where AI will be able to do everything quickly in one shot. And the human being was doing that, boards a flight back home. Okay. Less skilled people, unfortunately, will be replaced. So the lower you are in the skills hierarchy, the more your chance of being replaced. And massive pressure is going to happen on banks, research companies to publish data quickly. The person who can get out in analysis earlier to the market is going to win. And there's going to be a massive rush. And guess what is going to help them win that rush? AI, right? So Goldman Sachs, Morgan Stanley, JP Morgan, they're already investing billions in this to be the first to market, the first to inform clients, and the first to trade. And guess what? Just like we are doing now, has happened for decades. The analyst who has access to the same tools, all the analysts have access to the same tools, by the way. But it's the guy who uses creative ways to collect information, isn't it? I mean, you and I and everyone has access to Bloomberg and Excel and PowerPoint. But who actually wins is the person who can use the information best, creatively speaking. Pick up trends before anyone else can pick up a trend, or pick up an investment idea, for example. Yeah? And the best professionals, the good news for you, the best professionals will be even more valued, or even highly paid, right? Get paid much more thanks to support of tech. So we're going to see, now I'm going to talk about this, not enough time to talk about it. We're going to see a rising inequality in the workplace and in the world. You're going to see some very smart people making lots of money, and you're going to see a lot of people getting unemployed, and because they don't have the skills. And you cannot reskill someone to be good in AI or computers. It doesn't happen that way. Okay? Unlike the earlier revolution that we had, industrial revolution, et cetera, et cetera. We're going to have that issue. It's going to be a major issue. It's already happening. The rich get richer, the poor get poorer. Okay? So what's my career advice? Because that's one of my outcomes for today's presentation, right? What is the career advice? Okay? For yourself, for anyone that you're mentoring, for your colleagues, maybe for your children as well. And if you have kids, then, makes sense to look at that as well, right? So my career advice would be, go into roles that machines are currently bad at, right? So, for example, select a career where you can say yes to the below, the 4 questions. What are the first one? Does it require interacting with people? Machines not good at that, social interactions. Does it involve creativity? Machines are very repetitive. They're not very creative yet. Does it involve coming up with clever solutions? Okay, risk management solution, investment solution, client relationship solution, whatever it is. Does it require working in an unpredictable environment? Remember, machines are very good in working with predictable environments. They have an algorithm. Okay, if this happens, this happens. That's how they're designed. So teachers, nurses, doctors, dentists, scientists, entrepreneurs, even hairdressers. You cannot replace a hairdresser. How would you like a machine to sort of cut your hair? I mean, I'm a bit uncomfortable with that, What if it goes haywire, and instead of cutting my hair, starts cutting something else, Sorry? Cutting an ear or even worse. So, I wouldn't go that. I wouldn't go to a hairdresser with machine automated, right? And this is also very important. I want to stress this. The techie and the fuzzy, there's always this conflict between, are you going to be a tech guy, or are you going to be a soft skills guy, Are you the people person, or are you the process person, isn't it? Yeah. So, as technology continues to improve, cultivating soft skills is the best way to assure job security. The fastest growing cognitive occupations, managers, teachers, nurses, lawyers, economists, all require significant interpersonal interaction. 92% of 900 executives polled by the Wall Street Journal stated soft skills are equally or more important than technical skills. And I want to spend some time on this slide, specifically with reference to what Salim mentioned when he kicked off today's session, right? And talked about personal branding and value perceptions and interactions with the customer. I think most finance people are very smart, they're very qualified, they're very hardworking. I can go on and on about their positive attributes. But I think from my interaction, I've been a finance director, I've been an auditor, I've been an analyst, I've been a trainer, I've been an entrepreneur. Finance people are not always the most soft skill savvy folk. You agree with me or not? Yes. And that is one of the biggest disadvantages. We are not able to communicate properly, we cannot interact, we cannot inspire, we cannot lead, right? We are very territorial, Don't come near my IFRS or my policy manuals or my SAP or whatever it is. That is going to be a biggest disadvantage because guess what? Machines can replace us. And I see when I mentor lots of young professionals, CFA, CA, chartered accountants, and their biggest issue, they lack confidence, they lack communication skills, they're not able to make an impact or they make their presence felt. This happens irrespective of age, although as you get older, it gets better. So I think one thing that senior finance professionals, whether you're a finance director or CFO, doesn't matter. You need to focus on is a soft skills spot. I can tell you my story briefly, okay, given the time allotted to me. I was a hard-nosed control freak when I was in audit and when I was a finance director. And I was, the guy would say, you have this much time, you have your KPIs, go and do it. Interpersonal interaction and empathy, not much. I set up my company 10 years ago, Genesis, and I found my biggest learning in setting up my company and growing it before I sold it to a multinational, my biggest learning was you have to be a people person. I was good technically. I knew my stuff technically. No one could tell me how to teach finance or investments. But managing people, inspiring people, right? Taking people to a different level was a whole new game that I wasn't prepared for. I was reluctant to admit to myself how bad I was, even though people told me about it, right? So when you go back to organizations, please reflect on what I just said now. I don't know any other session on soft skills today or yesterday. And your best way of improving, what's the best way of improving in this area, you think? How do you start off? How do you start this off? Meet more people. Sorry? Ask feedback, brilliant. 360-degree feedback. 360-degree feedback was one of my main triggers. My subordinates, my colleagues, my HR manager, basically give them the freedom to open up to you. You'll be surprised how crap a leader you might be. Okay, you might think in your mind that you're fantastic and God's gift to accounting and finance, but you'll be surprised with the feedback. And please accept the feedback in the right way and don't fire the guy or humiliate him at his performance appraisal coming up. Okay. Continuing on career advice, again, in accounting, don't be the bookkeeper. Bookkeeping is old-fashioned. Everyone, the system can do bookkeeping for you. Be the analyst or be the business analyst. Be someone who adds value to the business, right? In private banking, again in finance, private banking, don't just go and allocate assets. Machines can allocate assets. Strategic asset allocation can be done very fast by machines. Be the guy who adds value by building relationships and trust with the client. Clients don't want to look at machines or deal with machines. Clients want to deal with a flesh and blood human being, right? They want to talk stories, ask for advice. In asset management, don't be the quant. You know what quants are, right? They're very geeky guys who work with numbers. Yeah? Don't be the quant who applies algorithms to the data and gets replaced by software. But the fund manager uses quant analysis results to make investment decisions. So basically, you are using the quants as a tool for yourself, but not an end in itself. In medicine, and it can apply in many areas, in medicine, don't be the radiologist, but the doctor who orders the radiology, discusses with the patient, and decides on the treatment. And in law, don't be the paralegal who reviews thousands of documents and gets automated away, but attorney who advises the client and presents the case in court. So what is common in all these areas is what? Relationships, soft skills, communication. You already know your technical stuff. That's fine. In fact, I'm a chartered accountant, right? And when I was young, I was telling somebody in the audience, when I was young, I could not believe how foolish and naive I was. I thought I knew everything, When you qualify as a chartered accountant, right? You think you know everything, First attempt qualified, you should know your stuff, right? I'm shocked at how ignorant I was, looking back. So what is the summary? AI is fast evolving, Routine specialized jobs are easy to automate and will be automated away. Lots of hype, by the way. If you read books and newspaper articles, lots of hype about AI, right? Run for your life, you're going to get automated tomorrow, and yes, machines are going to be your bosses, and I think we are far from that situation. How far? I couldn't tell you. No one can tell you, I think. But I think HI, human intelligence, is still with us for a long while to go, yeah? Soft skills, and I'm going to emphasize that over and over again, soft skills are far more crucial than you and I think. They have much more power to make an impact, yeah? And rather than saying 100% AI and automating everything away, I think we should talk about the collaboration between AI and HI. So I was talking to Peter before the session started, and we were talking about the fact that business needs to be streamlined, but then you have to look at the human factor as well, not just the numbers and the systems. So I think that's my takeaway. You need to learn to work better with AI as human beings, and not just leave everything to AI, and not leave everything to humans as well. And by the way, humans are not perfect, by the way. We know this. Okay, we also make mistakes. So I think a blend of both is what we're looking at, yeah? And the end piece, and I hope this is where we're heading to, I really hope this is where we're heading to, is humans need and want more time to interact with each other. Is that true? I mean, we interact most with our smartphones, okay? Not with each other anymore. I think AI coming about and replacing routine jobs is pushing us to do what we should be doing anyway, the creation of more humanistic service jobs and interacting with each other and making a positive impact and influence, rather than leaving everything to the machines and being sucked into automation. I have a podcast coming up called The Real Finance Mentor, where I intend to talk about all these things. It's a very finance-focused podcast. I have learned over the last 25 years of my career that people need mentoring and advice at all levels in the organization. So I'm going to be interviewing practitioners, I'm going to be interviewing students across nationalities, across sectors, across companies. I'll probably meet some of you as well, hopefully. I interview you as well for your experience. And the podcast is basically meant to deliver insight and inspiration for finance careers. Yeah? And I hope you listen to it. Once it's live, I'll post on LinkedIn once it's ready. And hopefully it'll be useful, entertaining, and informative to you as well. Thank you so much.
So do you have any questions for Binod?
Thank you.
So thank you, Binod. I think you have really, can I have a mic over there? The fusion of artificial intelligence and human intelligence is the future. So we have to work with machines. We have to work with AI, and it's a reality. It's already happening. And today we'll be working with you as to how we can incorporate. Yes, please. Question.
Good morning, Mr. Binod. It was a fantastic session to interact with the AI and HI. So my question is, like, we have like now tool like Power BI, Tableau and all. So should we learn the technicality of this Power BI, like how the DAX language works and all, or rather than we should just be capable of utilizing the services so that we can analyze more? Or we should go deeper in learning those tools? Thank you.
Right. So your question, Manish, right? Manish. So your question goes back to 20 years ago or 25 years ago when I was learning Excel, right? And so my strong temptation was to learn the macros of Excel, and learn the VBA, the language behind Excel. But then I thought, why do I waste time on that? I just need to know how Excel works and what I can do with Excel. So I think the focus should be, rather than getting too immersed in technicalities, which you can if you want to, is try to find out the power of the tool and utilize the power of the tool. Learn as much as possible. You don't want to be a quant or a geek or an IT guy, right? You're a finance person, you're a chartered accountant, right? So you have finance accounting knowledge. How do you leverage that knowledge by using the tool available to you? So one thing I was very good at in my corporate life was, I'm a technical idiot, by the way, interestingly. Even Excel is very basic as far as I'm concerned, right? I barely survive on Excel. But I was very good at reporting, communicating. So extract the information, see patterns in the information, that no one else can see, and then communicate it concisely and comprehensively. That was my strength, and that remains my strength now. So I think if you leverage on that, that's probably a better way than just going deep into the technical aspects. That's my opinion anyway.
Thank you.
Pleasure. Hi, gentleman there, yes.
All right, good morning, everyone.
Morning.
My name is Eronla Adelani. Actually, why I'm here is to put an end to a fear that I'm carrying, and possibly I've been able to get some light from your presentation. But here is my question. How do you cope in a new environment? You're going into a new environment. You've said a lot. You're going into a new environment, new geographical location, everything. You're new in that environment. How do you cope? How do you become acclimatized with the new environment, irrespective of your profession? Based on your presentation, you find yourself in a new environment. How do you get quickly into that environment?
Okay. This is not really do with AI as such. So I've switched environments quite often. I've been accounting, then audit, then finance director, then entrepreneur, right? In different countries. I found that the best way of coping with the new environment is to network with like-minded people. And something like this platform that you have here is a fantastic opportunity. Sorry? Sorry. Technical issues again. This is HI and AI. I think that is gone. Can you hear me now? Yes, sorry. So I think the question was not about AI or HI, it was basically about transitioning successfully, right? That was the question about, right? So I have transitioned successfully many times in my career. I used to be a banker, then I was an auditor, then a finance director, then an entrepreneur, then a trainer. And I found that the best way of transitioning successfully is two things. One, network with like-minded people in your profession, in your sub-segment. Learn from the best, and then be very open-minded as to what you're learning, what you don't know, right? And that's the most difficult part, to be honest. I found that learning was the most difficult part for me, especially behavioral attributes, changing your behavioral attributes, not easy. I mentioned on the stage just in my presentation how difficult it was for me to be a leader, leading a company, right? And honestly, technical skills are easy to learn. Behavioral skills are very difficult to learn, extremely difficult. And the older you get, the more difficult it becomes. As everyone, people around the table can testify. So I think as long as you're open-minded, I know it sounds like a cliche, but it actually worked wonders for me. And you network with the right people. And if you can get a mentor in your organization, for example, that'd be fantastic, Someone to mentor you, either your boss or someone senior who has been there, done that, who knows what to avoid. So I mentor lots of youngsters, and I can tell them, listen, don't reinvent the wheel. I've been there, made my mistakes, by trial and error. You don't need to go there. So I think that's the best way of coping with any new environment, either a new company or a new geographic location. It doesn't matter, really. Does it answer your question properly? Thank you.
Thank you very much. Any more?
Yes, over there.
Yeah. Here.
Yeah, thanks for a very insightful presentation.
Pleasure.
And now talking about the soft skill, what you mentioned is going to be very critical, from the even financial professionals' point of view. Now, one of the things which was also mentioned yesterday and earlier today is about telling a story based on the financial analysis. How do you communicate to the business? So according to you, which is the best way to, communicate the story behind the financial analysis, or what the summary of all the number crunching that we do in our daily lives?
That's a very interesting topic. So I teach something called financial storytelling. And you think, what is the link between financial and storytelling, right? A lot, by the way. Because one of the issues that finance folk have is that we like to present numbers, right? Lots of lines and lot of text and a lot of numbers, but there's no interpretation. So financial storytelling is about quite a few things. Number one, big picture. Okay? So whenever I teach or I talk or I train, I always start with the big picture. Where are we now and where are we heading? Number one. Number two, graphics. A picture is worth 1,000 words. People like graphics. Intuitively, we are programmed to recognize pictures and graphics, but not too much. Don't overload people with animations and flash and stuff. That's going to kill them. Death by PowerPoint or death by graphics. So big picture, graphics, and have a flow. There should be a flow when you're going from one slide to another. You have a flow, and also make it very compelling for the person to understand. So when I teach, I try to make it relatable. There should be something that Manish or Vasudev or Irfan or Ziad can pick up. Yes, that they can relate to themselves. So I thought my biggest advantage as a storyteller, either in class or on stage, was to be able to sit in the other person's shoes and sort of see what he wants or what she wants, and then build my story accordingly. And then it became very easy. Like Salim said, it's all about customer orientation, really. It's all about audience orientation. Once you can sort of see what the audience wants, then life becomes so easy. The problem happens when you are stuck in your area and you want to tell your story in your own way, right? So I think this is pretty much the advice. But financial storytelling is very important because non-finance people do not get finance people. One reason is because finance people are unable to speak their language. Not English, everyone speaks English, but it's about what Salim said, right? You are talking, but he's not listening. Why is he not listening? Because you haven't pitched yourself properly. You talk about IFRS 9 and ECLs and debits, credits, and impairments and allowances and provisions. The other guy is hearing. Exactly. Less jargon. Another word of advice. Cut down on the jargon. Okay. And don't try to impress people with jargon, right? It's very, very, very tempting to impress people with jargon. So Vasudev, you had a question as well?
Hi, Vinod. Thanks for a nice presentation.
Pleasure.
My question was, how to convince the clients, we have all heard of all this AI, fintech and all that technology where you talking of a return on investment. For example, it takes time, it is not immediate. And then the paradox is technology is changing very frequently. So, how do you convince a guy that you need to do this and person or management, and you will see the return in a couple of years or 1 year? So they're reluctant to, go that route. So what is your take on that? I mean, how do you solve that?
I mean, it's tough to convince clients these days, right? Especially these days when people don't have budgets and we have a flat economy. The obvious answer would be a business case. I mean, business case can be in terms of cost savings or additional revenue. The second point I would have is not everything has to result in automation. Not everything is about putting in place an IT system. It could be simple as re-engineering the business process. Because every company, trust me, has inefficiencies. Every company. Private, government, semi-government, every company. They don't know it. Or they know it, but they haven't done anything about it. So I think if you can locate the inefficiencies and basically say that if you can release so much or add so much or cut so much, that's the key thing. I think we all sort of get carried away by AI and automation and new systems and blah, blah, blah. But in reality, maybe they don't even need that. All they need is basically fundamental business rejig, isn't it? Have proper reporting relationships, for example. Have a proper JD, job description, to start with, which most companies don't have. Yes, have proper performance appraisals, for example. Not everything has to result in automation. But going back to question, I think value add through revenue or cost cutting, and maybe better customer interaction, like Salim said earlier as well. I think that's missing in lots of companies. The interaction with customer is missing. They have left everything to IVR and robots, which is quite disappointing. Yeah.
Right. Thank you very much, Binod.
Pleasure.
I think